Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani here. In this video, I'm going to answer a lot of queries that I have received from my dear viewers on the many videos that I have made on gold and silver. Let's call them bullion collectively, on physical buying in bullion. You may have many queries, and some of you have asked in comments. Equity Master subscribers have sent in queries via customer support. So I'm going to dedicate this video to answering as many questions as I can to the best of my abilities. I hope I'm able to solve many of your problems and queries and probably even misconceptions about gold. Before I begin, two caveats. Number one, I am not a practicing income tax practitioner. I'm basically an investor. So please consult your chartered accountant or a qualified person before you take action on investment delivery in gold and taxation issues, etc., etc. Number two, many of my viewers have asked for references of reliable sellers, distributors, wholesalers of gold, and I'm going to provide you some names, but many of these are people I have no financial dealings with, and these are reputed names in Zaveri Bazaar, and therefore one can assume that you will get a fair deal. Of course, you're going to ensure what I have already told you in my earlier video, how not to get cheated while buying gold. So all those safeguards will have to be taken by you as default. I'm going to take each of the queries one by one, and the first and most important and oft repeated query by many of my viewers is, Vijay, how much gold can I buy, and if I buy too much, will the government take away my gold? Now, I remember I switched on my television in the evening on 1st of December 2016, and what I saw on the ticker on financial television channels was something that I got confused, admittedly, even myself. So there was this item which was being flashed across all television channels, that an Indian unmarried woman above the age of 18 can have 250 grams of gold. An Indian married woman above the age of 18 obviously can hold 500 grams of gold, and an Indian male, married or unmarried, above the age of 18 of course, can have 100 grams of gold. Now a lot of people think that this is a hard top or an absolute limit to how much gold an average Indian citizen can hold. This is absolutely wrong. I'll clarify this. You see, this is the amount of gold that you can hold without having proof of purchase. By proof of purchase meaning a bill, an invoice. You might have either got it as Stridhan, which is a gift to a woman from her parents or even her in-laws. You could have inherited it from your ancestors, and you might have even got it as a gift in earlier years, and you do not have any proof of purchase. So this is the amount of gold that you can hold without having to prove where you have got it from. And even here, there is a slight gray area that the IT department, the assessing officer, will at his own discretion determine whether the person belongs to a community where giving and taking a lot of gold as gifts, either at the time of marriage or otherwise, when a couple is blessed with a child or whatever, whether there is a custom to give and take a lot of gold, then the assessing officer might give you a certain more leniency in the amount of gold that you are having in your house. This is the amount of gold that can never be confiscated, even in the unfortunate case of a IT raid or a visit by the income tax guys. Not that I'm saying that it happens, but I'm saying that if this is the query that you had, this is the amount of gold, 100 grams for male, 250 for a spinster, 500 grams for a married woman, you can own without any proof of purchase. If you are buying afresh and you are paying this for this gold by any proof of payment, digital online transfer, check, credit card, where there is an audit trail, and you're taking a valid bill where the seller's GST number, etc. is provided and the gold is hallmark, you have no limitation on how much gold you can buy. Now, just go back in time and see how many people who have contested elections and now it is mandatory to disclose your assets. Just note how many of our politicians or businessmen turned politicians have disclosed gold. It is far above the 100, 250 and 500 gram threshold. So remain assured, it is not a limitation, it is not a cap or a hard a top as to how much gold you can own. Just make sure that you have proof of purchase, which is bills ready. Now, the price that you are seeing on your screen of the MCX, the Multi-Commodity Exchange in India, is flashing in Indian rupees for gold in multiples of 10 grams. It does not include GST, which is levied at the rate of 3%. In the case of silver, the price in Indian rupees is for 1 kilogram. Here again, 3% GST applies, and this price is ex-delivery Ahmedabad. So, some wholesalers might, I'm using the word might because in Mumbai's every bazaar, I have not seen dealers asking for delivery charges. So at the most, if you're living in a far off place, I'm sure there must be many viewers of mine not from Mumbai, you might have to pay delivery charges, but remain assured it does not exceed 50 to 100 rupees for 10 grams. Alright, so 3% GST, and there is a misconception that this 3% is lost when you sell that gold. That is a misconception. Number one, even if you are not a registered GST account holder or a GST payee, you are still making a payment by check and it is claimable in the books. If you are an assessee, a GST assessee, you will be paying this GST to the jeweler and obviously you will be taking a set off. So this 3% is not actually a loss. So get that misnomer out of your mind. Then what about taxation? A reminder, please consult your tax practitioner or a chartered accountant as well. Now, standard rate of gold is declared by the government, and since you are buying in physical, it's a physical asset, long-term capital gain tax at the rate of 20% will be levied on you provided you have held that gold in any form, bars, coins, rare antique jewelry, etc., in excess of 36 months, which is 3 years. Alright, so 20% long-term capital gain tax. If you are selling that gold at a profit in a period less than 3 years, then short-term capital gain tax will apply. Now, here comes the contentious issue. What if I have not purchased that gold and my relatives or whoever, anybody, XYZ person gifts you gold up to 50,000 rupees in value per financial year is tax-free. The minute your gift in gold, bullion or silver crosses 50,000 rupees in one financial year, then taxes will be payable. So in case, now for example, I'm recording this video on 16th of February. If at all you want to give somebody gold worth say 75,000, you are approaching the financial year end. For those of my viewers who are not stationed in India, Our financial year end starts on 1st April and ends on 31st March of the following year. So if you have 75,000 worth of gold to be gifted, give half of it before 31st March and give half of it after 1st April. It will then span over 2 financial years. So 50,000 is a limit in one financial year to be gifted without taxes. Also, once you are holding gold for a long period of time in excess of 3 years, inflation indexing benefit will also be provided to you as a relief from inflation or महंगाई. In Hindi it is called महंगाई dar. Alright. I have often told you in all my videos that you should not resort to your traditional rub test. Now there is a oval black color stone on which the gold is kind of rubbed, and the dust that falls off the gold is to an experienced eye enough proof whether the gold is 18 karat, 22 karat or whatever, but that tests only the surface. What if the center is a stone or a piece of iron or copper, whatever? Only electronic testing can safeguard you and give you peace of mind. And I have often told you that this electronic testing must be done at a third party, not at the point of purchase. Because if you are telling the guy who's selling you this gold to test that purity, you're telling a wolf to guard the chicken. Alright. Now, many of you have asked me that what do you mean by saying that the charges for this electronic testing is less than a cost of a masala dosa or a pav bhaji or a pizza at any given point in time. So let me tell you what is the going rate in Zaveri Bazaar. Zaveri Bazaar, for those of you who don't know, is the bullion market. That is where many bullion shops, especially wholesalers, have their offices and showrooms. So there are many testing shops. I would be surprised if there are less than 50 to 100 independent testing shops in Mumbai's Zaveri Bazaar. They charge you anything between rupees 50 to rupees 100 per item. Per item. So if you're buying a 1 kilo of gold, which will be obviously a 1 kilo bar of gold, which will obviously cross 50 lakh rupees, even if he charges you 100 bucks, believe me, you're going to sleep much better by getting your gold tested. 50 to 100 rupees is not something you should grudge yourself and rob yourself of your good night's sleep, especially with our hard-earned money. So that takes care of your testing charge. Now, the price of gold that is routinely quoted in Zaveri Bazaar is of 99.95% purity. And I have often told you that the slimmest bid and offer spread, that is the difference between buying and selling, the finest or the smallest difference between buying and selling is for 99.99% purity gold. Now, when you are basically taking a quote from any wholesaler, he will give you a quote for 99.95. If you want 99.99, the charges are approximately 200 to 250 rupees per gram higher. I would say buy 99.99 higher purity, because at the time of selling you get a higher markup as compared to 99.95. Alright. Now 99.95 is more prevalent because people who don't know much about gold tend to buy this, and it is very easily and routinely available in the form of biscuits, in bars, coins, small minted festival coins. For example, at the time of Diwali there will be a embossment of Goddess Lakshmi. At the time of some IPL cricket match or something, it could be XYZ team, etc., etc. So these are readily available, and 99.99 is routinely sold in the form of a 1 kg bar, which looks like a Cadbury chocolate in a gold foil, which is why Mumbai, Zaveri Bazaar, Marwadis and Gujarati gold traders call it Cadbury. It's a slang word for 1 kg bar of gold. It is called Cadbury. So when you go for 99.99%, chances are if you want a smaller denomination less than a kilo, the guy will tell you, I will need to cut this. Now cutting means obviously charges. Now if you want a machine cut, which means an absolutely fine finish, a commercial finish, and it will be exact denomination of 50, 100, 150 or 200 grams, the charges for that cutting are higher. But if you want it hand cut, it is not a guarantee that you will get exactly 50 grams or 500 grams or 450 grams that you want. You might get it in a slightly odd figure, which is why it is called an uneven bar, or even called tukda. Tukda means piece. Just like some people buy broken basmati rice, which is slightly cheaper. Gold is also mostly traded in tukdas, where 99.99 is concerned. But remain assured, as long as you're getting it hallmarked and stamped for the seller's logo, taking a bill with a hallmark certificate, and then after all this, paying 50 to 100 rupees more for electronically testing your purchase and getting peace of mind, how does it matter whether it is a machine cut or a tukda? Alright? In case you want to melt it and make jewelry or something at a later date, why pay higher charges for absolute fine machine cutting? So I would favor tukdas or uneven pieces, both in gold and silver. Silver, by the way, is almost always sold as 99.95. You do not normally get 99.99% silver. So it's okay if your quotation that you're getting is 99.95. But whenever you're buying and whenever you're taking a quote, do clarify to the person you're speaking with whether the quote is for 99.95 or 99.99. Because like I said, there is a difference of 200 to 250 bucks. Now testers, like I said, are dime a dozen. In Mumbai Zaveri Bazaar, you would possibly see a tester in that Bullion market area every 50 to 100 steps that you walk. Then insist on a bill and hallmarking and logo of the seller. The reason being that your bill is your proof of purchase. At the time of claiming long-term capital gain tax protection and LTCG, long-term capital gains and indexation benefits, it is counted from the date on which you have purchased this gold. So please do not lose your bill and insist on a bill. Make a payment officially by check, by online transfer, credit card, whatever means, but there should be an audit trail. Now, for some names that I'm referring and recommending to you, remember, many of these guys are somebody who I have not dealt with, but they are supposedly reputed names in the market. And as long as you do your due diligence, testing, hallmarking, taking bills and insisting on a hallmark certificate, you should be fine. So there are guys like VTL Jewelers, PNR Jewelers, Neha Jewelers, Nakoda Bullion, National Refineries, and there would be obviously many more. It's not that I'm favoring or at the expense of excluding anybody else. You can at any given point in time just walk into any shop that looks large enough and big enough, but I would suggest you not buy from individual small shop owners, but go to wholesalers. And preferably somebody who has their own refinery, which is why I told you National Refinery and Nakoda Jewelers. Even the other guys, VTL Jewelers, PNR, Neha Jewelers, they give you a very fine rate. Alright? And testing and all makes it very safe for you. Friends, I hope I've answered all your questions. On this happy note, I leave you with the exciting prospect of going to Zaveri Bazaar, not only taking in the sights and smells and sounds and the ambience of what goes on in an average bullion market, but I also wish that you make lots of money buying and holding your bullion, both gold and silver, because come midterm elections in America in 2020 at the end of this year, once that's done and dusted, the effort to subdue gold to push up the dollar higher because the dollar is inversely related to gold. Dollar is the invoicing or the payment currency. So if the dollar is kept strong, gold will be artificially subdued. Once the election is done in 2020, I think 2023 belongs to bullion. Even before that, we have inflation, we have the prospects of stock markets either plateauing out, peaking out, and money seeking better avenues to invest itself. I believe in gold, I believe in God, and I think you should too. On this happy note, I bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, good, bad or ugly, I'd love to hear from you. If there are any more queries that you wish to send me, I would attempt to answer them at a future date. Also, please help me reach out to fellow like-minded investors and traders by referring my videos to your family and friends. I hope you're staying safe. Take good care of your money and your health. This is Vijay Bhambwani signing off for now. Take care. Bye-bye.